Hey, ladies and gentlemen, we're going to do a quick video here as I'm getting done with my way-do practice here. And I've been out in the ocean, still not that good, but I'm trying. I'm getting better, okay? And that's what it is. Practice makes perfect. But I thought I'd make this video so that I can teach more people how the whole system is working against you so that you can win in the system and then you can be out there with me because, I'm falling into the water and I don't want to be out there by myself. You know what's in the water, and actually that helps me stay on top of the board, right? Because could be some things in there. Anyway, won't go into it, but we're going to talk about something that's far worse, and that's our system, the banking system today. And if you don't understand the banking system and how it runs and why it does what it does, you're going to be a debt slave for the rest of your life. And you're not going to get out of it. You're going to actually work the 9 to 5, maybe 2 jobs now because of inflation. And you're not going to understand, well, why is this happening? Why is it escalating like this? How do I get free from this? And that's what I'm going to give you 3 top things about the banking industry that you need to know so that you can set yourself free from it. Number 1, well, you have to realize that the interest that they charge you on a mortgage, the majority of it is paid up front, right? So if you get a house, let's say for $300,000 and that house goes up to $400,000, well, you think you've made $100,000. In reality, you've been paying off the interest, the majority of the interest up front. So who is really benefiting? The bank, right? Because their interest payments are being paid out of the majority of the payments that you're making to the banks. Most people don't realize that, and they'll be there 10 years later thinking, oh, I made some money. In reality, they'll look at their statement and it's like it hasn't even really adjusted. That's because you're paying the interest up front. That goes also with your car payments. You need to realize how much is that car costing you. Don't ask what your monthly payment is. Ask, what is it going to cost me at the very end, at that last payment? And then you'll realize how much more you're paying for that car. And that payment is making the bankers richer, not you, the bankers. What I would do is basically save the money until you can afford a car. Let's say you can only afford a $5,000 car. Well, it's $5,000. Then you save the interest that you would be paying to the bank, right? You own it outright at $5,000. Even if you can only save $2,500, buy the best whatever for $2,500, for $5,000, so that you can save that extra money to you. And let's just say right now your car payment's maybe $500 or maybe it's $400, and part of that payment is the interest, right? So the interest might be anywhere from 100 to who knows. Nowadays the interest rates are crazy that these used car dealers are charging, or even sometimes the new car dealerships. But basically, you save that interest and you keep stacking until you can now buy a $10,000 car, right? Or you can use that money to invest in something else that makes you money. For me, I started off with some used cars. So as a break dancer, I would make X amount of dollars, and then I went to the car auction. I would buy cars for maybe $300, $400, put a $100 paint job on it, maybe sell it for $1,000. But that gave me a profit, right? I slowly but surely realized, okay, well, if I can do that, I can increase it. So maybe I buy a $1,000 car. Now I've sold it for $2,000. But I started with what I could afford, made the profit, used that profit to buy something else that would increase my profit. And then I finally got into real estate. But that's what I'm trying to tell you is that number 2, take your money and make it work for you. Don't waste your money on the shiny toys, right? As I'm looking at the way to look, don't waste your money on the shiny toys. Get your investments to pay for your shiny toys. I actually sold the duplex in Orlando to pay for this, right? I bought it in 2010, and I'm one to just keep investing and investing. But I had to realize to myself, you got to play also, right? That's that balance, That's going to be number 3, by the way. The balance is you invest You make a profit. Now with that surplus, a little goes to you, like this did to me. The rest goes into another investment. And that's what I did. I bought a beach house over here, which is now also a rental property, a short-term rental property. See how it keeps increasing. Now, number 3. It's already 5 minutes in the video. I'm trying to get this done. Stick with me. Just one more, okay? 3, don't get greedy, right? Don't be like the bankers and get super greedy that your money has got to make more and more and more money, because now it's an addiction. You become addicted to the game, right? Most people will say, well, you need to over leverage. You need to get as much leverage as you can. Look, how much money do you need before you live a good life? Don't get addicted to the money. Get addicted to your life. And for me, I did that exactly how I've described. I would stack the money to buy the investments, the next investments. And I'm a cash buyer. It sounds kind of strange, right? In this world of everybody is using leverage and interest. Well, in 2008 through 2012, it was amazing what was on sale. And this is part of number 3, is that you have to use your money wisely and also wait for the right time to buy. A lot of people that are average people will say, you just buy at any time, right? Especially mortgage lenders and real estate brokers. By the way, do you know why they call them real estate brokers? Because if you listen to them, you'll get broker. Okay, it's an old school joke. I thought I'd throw that in. Anyway, you wait for the right time. You know, major investors, look at Warren Buffett. He is liquid. He is in the most amount of liquid position, which basically means he's sitting on cash for when it corrects, because he knows he buys everything on sale, right? You know it too. You know, you could go to the mall, buy anything right now at the regular price, or you could wait. It goes on sale. Now you've got 2 for the price of 1. That's what you need to do also. Actually, that's kind of a number 4. Number 3 was don't be greedy. Don't get addicted to the game. Number 4 is buy at the appropriate time when things are on sale. Don't continue to be a debt slave. The bankers love it. And who creates the monetary system? Who creates the printing of money that now is causing you to have to pay more? They do, right? Jerome Powell at the Fed, he's not in control of the monetary system. They try to pretend that like they are, but they're really to protect the bankers' interest. Look it up. Anyway, that was number 4. Now, if you got something from this, I'm going to try to grow the channel so that we can actually get out here together, right? Because I want more people to understand this. This is what I did. It's basics, right? You don't need to get addicted to the game of monetary empires, right? You look at some of these people on YouTube and they keep talking about, well, now I've got an apartment complex. Now I've got this. Now I've got that. They're addicted. They're addicted to the game. Don't get addicted to anything, right? Actually, there's one thing you can be addicted to. Addicted to improving your life and your lifestyle in a healthy way, right? I could see you doing that. But other than that, you'll become a debt slave to the bankers. Know when to get out. Listen, have a great day. Enjoy your life. Don't get sucked in and become a debt slave to the banks.